Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about, give you my opinion across the board. It's going to be wealth related, commodities related, or financial topics that I will cover. And you're going to get a whole bunch of my opinions here. If you need any help with anything, you can obviously check out finding-value.com. We do have a coupon going on right now called September is the coupon code if you want to get 50% off the first month. And again, if you want to follow me on Twitter, you can find me at finding_finance. So first question is, what would you rather have? $100,000 in annual dividend income or 1.5 million in cash? Curious on your pick. Well, I would choose the 1.5 million in cash. Why would I choose that? Well, one, I can generate cash from it. I can generate this annual dividend income, and also I can have the 1.5 million in cash. So that is more valuable because you can generate the annual dividend plus probably more than that with the companies I would put it in, and I would have 1.5 million in cash. So it's a combination of those two things. Plus, if you were to take $100,000 in annual dividend income and you were to discount it to today's dollars, that dividend income will get inflated away because it's a fixed rate. So the 1.5 million that you can grow, that dividend income could also grow that you're invested with it. And $100,000 is much less flexible. It's a rigid amount going on out, which will be inflated away. So I would choose the 1.5 million. No ifs, ands, or buts. That's what I would choose. A survey of 10,000 millionaires shared 93% use coupons. I actually still use coupons too to some degree. 93% stick to a budget. I don't have a budget. Average age is 57 years old. Greater than a third made $100,000 per year. 94% spend less than they make. Greater than $200 per month on eating out. 79% didn't receive an inheritance. Anyone can become a millionaire in his opinion. I pretty much fit this bill for the most part. I don't really buy expensive stuff. That's really where I do well. So I don't buy expensive cars. I don't have expensive things. I buy things that are of good value. So I drive an old Honda. We have an old Chevy Aveo. It's awesome. That I bought back in 2005. We spend money on food. We do that. But for the most part, I spend way less than what I make. And I invest the difference. That difference is what's compounding. And then if you invest in dividend paying stocks and you're investing a good portion of your income, that all makes a big difference, guys. It really starts to compound as you get older. They say the first 100,000 is the worst. I think it depends on how good of an investor you are. You can turn a little bit of money into a lot quite quickly if you can find really good opportunities and you position the money carefully. I think you can really make a lot of money if you can compound it quite a bit. Obviously, I couldn't do that in my 20s. I just didn't have the knowledge, period. Now I do, and I could easily replicate what I'm doing even faster. And that is something that only comes with experience. What I would say there is save as much as you can, invest in cash flow companies when everyone else is fearful. Make sure you got the tailwinds behind you, buy really cheap sectors, and eventually the money's just going to come flowing to you. You'll learn the ins and outs of the market. Barrick and Newmont, total gold cost at $1,750. That's your cost curve, guys. While Barrick and Newmont's total gold production cost leveled off in 2020 and 2021, they have rocketed higher in 2022 and 2023. This is the chart that he's got, Barrick and Newmont total production cost versus gold price. Production cost is the gold, and then the gold price has kept, outpacing that cost curve. So that looks very interesting, and we'll see if the cost curves continue to increase. So just that the gold price is giving a little bit of an incentive to still mine. Those cost curves are driving the gold price higher. What's your motivation to have a lot of money? What's your why? Why do you work so hard? Well, I prefer, what is the why? Why do I work hard, or what's up with that? I just don't like struggling. I'm not comfortable um, struggling. I'm not comfortable with where I'm at. So I want to make, I continue to want to make more money. That's why I did it in the first place. I started investing because I saw everyone around me. I didn't I didn't think they were that well off. I wanted to do better than most of the people that I went to work with, that I was surrounded by. And I was thinking, man, these guys don't make that much money. They don't, I don't know. I just didn't want to grow up and be like them. So, and that still goes for most people that I work with. I just don't think, I don't want their jobs, and I don't really want to necessarily be like those people. Not that they're bad people. It's just, I don't know. There's nothing great about the life that I see. So why would I want to be them? And I don't think money will necessarily, it's not going to be the answer. It's not the physical things that I want. It's the freedom. It's the freedom to do what I want, the freedom to sleep in when I want, the freedom to work out in the morning versus in the afternoon, the freedom to move the schedule around whichever way I want. That is really what I'm after. I don't need a Lamborghini. I don't need a Lamborghini. I don't need a very expensive car. I don't need any of that stuff. I just want control and freedom over my life. That's basically what it comes down to. And that's the motivation that drives it. I don't want to have less options when I get older. I want as many options to do what I want when I want, and give options to other people like my family and stuff. Grady says the commodities bull market will be the greatest opportunity in your lifetime to get out of the rat race. I waited for the bear market low back in 2020. Then I have said for 3.5 years, do not miss it. The uranium moved 500% in its baby bull, but it's just getting started. Volume thin zone all the way up means no historical volume resistance going back up. It's going to fly. This is uranium. When we break above this volume node that we're basically trying to get above right now, that's when we can fly. This is URA. This is the ETF, Global X Uranium ETF. We're positioned to fly here, guys. So, if you whatever you want to allocate to uranium, just stick with it and hold on. That's what I would say. Coming on down, once you cross the big $100,000 wealth threshold, the compounding becomes huge. $1 million should be your next target. I guarantee you get there, keeping the same saving and investing habits you used to build the first $100,000. Well, if you invest that money into some really good companies, you could get to $1 million a lot quicker than you think. I blew through 100 like it was standing still, and just kept going, 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 going. I did. There were some levels that I got stuck at for a while as markets pulled back over the years. I also didn't know that much about investing in my 20s, and now it's going very well. I'm blowing through a lot of levels that I think are I think they're impressive. I'll just say that. Bitcoin, the VWAP zone continues to hold this week. Bounce coming is what he has. The only thing I'll say is just be careful when you start throwing these big red candlesticks. It's almost like this thing wants to head lower, perhaps. This is Bitcoin. I just don't like seeing these big red candlesticks with not much of a bounce. But it had a big red candlestick here, and it bounced higher. So we'll see. To me, this looks like it's rounding off and it almost wants to lose momentum and roll over. That's kind of what I see. The Kobayashi letter. Oil prices are now up 30% in 2 months and back up to their highest levels since November of 22. Last time oil prices were this high, the U.S. Strategic Petroleum Reserve had 240 million more barrels. The SPR remains near its lowest level since the 1980s. Meanwhile, oil prices are 22% above the 67 to 72 range, where the U.S. wants to refill the reserves. We expect OPEC to extend voluntary production cuts over the next few days. Higher oil prices are back. And here we are at 80, this is 88.55 on Brent crude. And the SPR is much lower. So we can see that the SPR had 240 million more barrels at this point here than it does today at the same price. Coming back, here's oil clearly working on a bottom here versus the NASDAQ. Currently broken out of the falling wedge, now with a proper chance to test the long-term golden trend line again. Here's the long-term golden trend line. We've got an inverted head and shoulders, and we're about to try to rip up against the NASDAQ. Once we start breaking all of these ratios, it's going to be pretty undeniable that commodities are starting to outperform stocks. We're still going through that topping or bottoming process, depending on how you chart this stuff. So topping process for the NASDAQ, bottoming process for a lot of the commodities. Be patient, guys. It'll come. And when all these ratios start to rotate and shift and the money flows really start flowing into commodities, you're obviously going to notice if you've got a commodity portfolio. It's not going to go unnoticed. Here is Cornerstone Analytics. He says, TikTok, TikTok, are you paying attention yet? So what this is our 2023 oil balance forecast by quarter, million barrels per day. This is the OPEC, non-OPEC supply. This is your big fat gap that you get in your inventory draws. We've got a big mismatch here, guys, and this is going to be millions of barrels of draws on oil. So we're going to see our oil inventories really dive down here. This guy says, how to become a millionaire in 4 simple steps. Get a high income, 9 to 5. Live below your means. Build 1 or more secondary income streams. Invest your extra money into tax-advantaged accounts. It's this simple. It really is. And then you want to figure out how to compound that money as most efficiently as possible. Breaking. Tesla has removed the standard range Model S and Model X in the US and dropped prices up to 19%. The Model X is now eligible for the $7,500 EV tax credit. There we go right there on the pricing. Now that pricing, guys, that is expensive. You can burn a lot of gas for $75,000, $90,000. That's a lot of money. Even myself, I do not feel comfortable spending this amount of money on a car. I don't know how a lot of these guys do it. I see a lot of people driving very expensive vehicles, 80, 90, 100 grand, making not that much money. I don't know how they're comfortable doing that. I get very uncomfortable going into debt. I get very uncomfortable spending a lot of money on a purchase. I wasn't that uncomfortable buying a house, but I would be very uncomfortable in buying a car that depreciates. Something like a Tesla would depreciate. I would be much more willing to buy more of a collector's car where it appreciates to some extent than I would something that just falls like a rock for the prices that you're paying here. Where do you keep your emergency fund? Well, I've got some money in the bank, and then I've got stuff outside of the bank, and then I have precious metals, which you could say is an emergency fund as well. We've got UROI here, big moves incorporated when we clear that double resistance. Here's your resistance line, the blue line, that thin blue line he's got here, and then he's got another thicker golden line, and we're right at that resistance level. Some of these uranium companies, they're at this specific level. They're trying to break through it. And once it breaks through, see ya, wouldn't want to be a flying to the upside. So we just got to be patient. We're going to get through some resistance. There's still a little bit of volume out there that we have to get through. And then we'll go in the fly zone. If a couple brings home $7,000 per month and their home costs them $3,500 per month, that is very risky. Yeah, that's a lot of 3,500 is a lot, guys. That's pushing it. 7,000 per month. That's pretty good if you're bringing home 7,000 per month. That means you're probably making at least 100 grand of income, and then you put some money into a 401k. You spend some money on insurance and all that stuff, and you might bring home 7,000 or something like that. This seems fine. Top 10% owns 70% of the U.S. wealth, and I'm sure it's really up on the top 1%. So top 1%, next 9%, next 40%, the bottom 50%. Bottom 50% own basically nothing, and then the next 40% is a big chunk, 9% and top 1%. So what you want to do is you want to get as much assets as possible and let them make you money. That's the name of the game. You got to start, and you're going to be working your way up this level if you get to the top 1%. But I think getting up in this area where you've got assets generating income or wealth, that's where you need to be. Period. Got to get up there. Someone should be 100% debt free before purchasing a home. Do you agree? I don't know if I'd agree with that. Maybe not 100% debt free. You could have some debt. It's not a big deal, but I think you should be mostly debt free for the most part. Have a small amount of debt or something that you're paying off or whatever. You could buy a house and still have like student loans or something like that. I could see. If you want to lock in your costs and you're doing it strategically, I don't see a problem with that. I don't think 100% debt free would be. I don't think that's a requirement in my opinion. When they say it, they mean it. Saudi Arabia oil exports were down 972,000 barrels per day a month over month in August. Understanding the will and intent is the key distinction for energy investors to appreciate. We've got oil prices rising to $85 coincides with the 4 consecutive weeks of growth in the U.S. Strategic Petroleum Reserves. This is the largest sequence of weekly increases since the pandemic recession. Energy prices have been steadily rising with the implied demand for oil near all-time highs, while gasoline prices are at the highest level in almost a year. Here's a reminder that U.S. oil production has not yet returned to pre-pandemic levels, and aggregate capital spending for energy companies remains 52% from the 2014 peak. Inflationary forces remain entrenched in the economy, and the government is now having to walk back its erratic policy of depleting its strategic petroleum reserves at an extremely sensitive juncture. 4 consecutive weeks of growth for the U.S. Strategic Petroleum Reserve. So maybe they're putting a little bit in there, starting to change their mind. And oil prices generally go up when they add to the Strategic Petroleum Reserves. So that's looking good there. Meanwhile, China's holdings of U.S. Treasuries have reached the lowest point level in 14 years, now down almost 481 billion from the peak. Look at that thing go to the downside, guys. But that's what I've got for today. That's all we've got. Hopefully you guys enjoyed the clip. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And we'll catch you guys next time. This is Finding Value.